All right, listen, guys, what if I told you that there was a way that you could just sit back? You could be in bed, you could go to the beach, you could be doing whatever you want, and you're actually going to be making money. And the best part is the money that you're making is going to be enough to cover your monthly expenses so that way you can live financially free. And I think that the concept of retiring early and financial freedom is often misconveyed. And what I want to talk about real quick up front on this video is that differentiation. So for me, financial freedom is actually just unlocking what you want to do in life. If you're making enough money passively to cover your expenses, then you could theoretically do whatever you want. But the thing is, it may not mean that you're living as luxuriously as you would like to. So in retirement, right, I think that I'm going to be living above my current means. Right now, I've cut back on pretty much all spending. I literally live at home to save money. And there's a lot that goes into it. And financial freedom for me today would be a lot more easy to achieve than it will be in the future because my expenses are so low. And so that's kind of my overall goal though, right? I don't think I'm ever going to necessarily retire. There's things that I'm always going to want to be doing. And one of those is going to be speaking on YouTube or doing a bunch of different things in that avenue and generating money that way. So hopefully that can help inflate my lifestyle just a little bit. But my overall goal is to be able to become financially free at a very young age. And there's a number of different things that I'm doing to foster that. And I want to talk about them in this video here today. But first and foremost, I think the most important way and what I've really been preaching on this channel is dividend investing. So what I'm going to do is go ahead and open my Robinhood investing application, scroll to the top here, and we'll go over some of the information. So over the past day, we're looking up $50. Over the past week, we're up $28. Past month, up again, $50, 3 months, $1,127 over the past year, $3,237, up 16%. So one thing you guys are going to notice in this portfolio, a lot of the companies I invest in are really well-known, well-established companies that you've likely heard of before. And what I'm trying to do here is basically bolster up my dividend payments, make passive income that's going to eventually cover my monthly expenses. And so as we get into it, I'll kind of flip into a few different of the investments here just to talk about it. But number one, the highest holding I have in this portfolio, SPHD, this is a high dividend but low volatility ETF. So if you invest in something like this, I think that it's better than just leaving your money in the bank. And obviously do your own research. I'm not a financial advisor. Don't just blindly copy everything that I'm doing and saying. You want to make sure that you are putting in your own work. But why I think this is a better option than the bank is because you're just going to get a better return, right? If you put your money into a bank account, you're getting a very, very, very minimal return on the money that is just being housed in there, right? I'm talking less than 1%, way less than 1%. And if you invest in pretty much any solid ETF, maybe the market tracing ETF or things of that nature, you can expect to get around an 8 to 10% return. This particular ETF, SPHD, you're not going to get as high of a return because it focuses on high dividend paying, low volatile stocks. So by that, it means if the market's doing extremely well, this isn't going to go up as high as the market goes. But if it drops, theoretically, it shouldn't go and drop as low as the market drops. So looking at this particular investment, I want to go on the 5-year trend. So for a while, I was investing in SPHD back in these days when it was hovering around, $43. And it really didn't experience much growth, right? In the span of 4 years, it only went up 9% when there's other investments you can make that are going up, 9% every single year. So you might look at it and think, okay, there's not really a great opportunity here, but then you have a huge, massive dip like this right here. And this is where I picked up a bulk of the position. So if I scroll down, you're going to notice that this particular investment, this ETF here, which also pays monthly dividends, is up 22%. I've made $500 on this investment in terms of market growth alone. That's not even incorporating the dividends that I'm paying. So every single month for the rest of my life, I'm getting around $7.50. Right? And I'm just going to continue adding on to this. So as this, $7, you can see the pending $7.45. As this comes in, I'm going to reinvest it into something like SPHD, which is going to grow the dividend for the next time. And that's just how you can achieve growing that passive income, right? So not only do I have this market gain, if I wanted to sell, I could recognize that, but all of these dividends that are coming in, I just reinvest back into these solid companies to then grow my dividend income even more. So what is the best thing about this, right? It can be stable. It could do this for the next 5 years, and I'm still going to like this investment for a number of different reasons. But the main one is because of the dividend yield that it has. You see, it has a 4.29% dividend yield. That basically means that every single year, just by holding this, I'm getting a 4.29% return. If the stock were to be stable, right? If this ETF were to remain stable or not trade like huge swings, not going way up, not going way down. And that's something that's very comforting for me. Again, way more return than what you're going to get in the bank. And a lot of people have the goal of just always beating the market. And that's not necessarily what you're doing with a dividend portfolio. What you're trying to do is just increase that monthly income so that way you can cover your expenses. And so again, I'm not trying to be a power hitter. I'm not going after these companies that have massive dividend yields. I want to be realistic in my investments. So the other thing is not all of them are always going to make you money. If I go into one of my positions in Altria right now, this is basically a tobacco company, cigarettes, things of that nature. And as we know, that industry has been taking a little bit of a hit, right? It's not the most ethically moral one, but Altria is trying to branch into things like cannabis, where I see a huge potential in the market for. So if I scroll down, you can see this dividend coming in, $21. Again, going to reinvest that, grow this dividend for the next time. It's looking really solid. I've got around 24 shares, but I'm down 4%. Now, that can change pretty quickly, right? The market's been rather volatile, so this could go back up. But this is an example of something that I'll continue investing in as it drops down, just because I see a lot of potential in new revenue additions in the future with cannabis being as part of their product breadth, right? So if I scroll down, this one has a much higher dividend yield at 7.24%. So yeah, it might be down, right, 4%, but if that's for the entire year, then you tack on that 7.24% dividend payment, then I'm actually doing well. I'm actually making money on this investment still. So to me, it's just kind of common sense, right? And I have a number of different portfolios. I'm not only a dividend investor, but this is a majority of it. This is my big focus because to me, it clicks in my mind. If I'm going to be able to make enough passive income through this to just be able to cover my expenses, then that's exactly what I'm going to try and do. And like I said, this isn't the biggest portfolio. It's $22,000. There's still a long ways to go, but I figure we could even jump in and look at the numbers that what it might take to retire here in the United States versus another location. But just for another example, I'm going to jump in and let's talk about Tesla, because Tesla actually isn't a dividend paying company. So a lot of people see some great opportunities in growth companies, and a lot of times dividend investing hinders the growth of some of these companies. So with Tesla, I'm up 33% on this investment, right? But I'm not being paid dividends. So I would only see this money, I would only recognize this gain if I were to sell it from the market. And so I bought in when the average cost on my shares are $489 and Tesla's trading at $655. So hindsight is 2020. There's a lot of great opportunities in the market. And even when the market's tanking, there are still some very solid opportunities, some very solid strategies that you can practice to actually make money. So I think investing as a whole seems like this really daunting concept that's hard to grasp, and it scares a lot of people off. But when you break it down and you look at it like, hey, how can I make more money? I'm putting money in the bank. As soon as you realize that when you are keeping money in the bank and inflation is happening and all these different things are playing into the factors, you're actually losing money by holding your money in the bank. So my best practice, right? What I do for myself is I hold an emergency fund in the bank. That's around six months to a year of my living expenses. So if anything were to happen, if I were to lose my job or anything drastic happens, right? I have enough to cover my butt and then figure out a plan. And so everything else that I have, I've been investing into the stock market. So again, I have a number of different portfolios here, and that's just one of the big dividend ones that I've been showing you. But just keep in mind that my mindset behind it is that if I'm putting it in the bank, I'm not making money on it. And so I am cash heavy right now because I am trying to foster enough money for a down payment, which I have. I'm actually under contract right now for a duplex, which is another strategy that I'll talk about here soon. But I wanted to actually jump in online and just look out some stats and figure out and get it in your mind, swirling around how you can actually achieve financial freedom in a number of different locations. Okay, so one thing that I want to talk about is retiring in a number of different locations. This is a list of the top 10 most expensive countries to live in terms of the median income that you're generating. So you can see in the United States, you need $43,585. And you may be wondering, well, how much do you need invested in order to attain that much money? And right off the bat, I just want to note that I might need a little bit less than somebody like you, right? Maybe you are trying to put yourself through college and you're using some of the money in that manner. Maybe you're trying to support a family, a significant other, or, there's a lot that factors into how much money you need. So for me, $43,585 is probably more than what I'm actually going to need to get by. So I could reach financial freedom probably around 30 grand or less, which is pretty amazing, but that's because I've cut back so much on everything that I'm spending. So I want to show you how to calculate that number of how much you need invested. So United States, $43,585. I'm going to come over here and go $43,585. All you need to do is divide it by your dividend yield. So for example, if I invested all of my money into Altria, which is not something I would do, but just taking in that high dividend into mine, so divided by 0.0724, because they have a 7.24% dividend yield, I would need $602,002. And then again, you might think, hey, this is really something that is that's going to be way too hard for me to do. How can you even achieve that much money? But you got to remember, you're growing, you're having growth on the stock market, you're also reinvesting dividends. It becomes a lot easier than you might think. And you might look at that number and still be really worried about it. And you're like, I'm never going to get there. Well, you got to start today is the thing. If you haven't started investing yet, now is the best time. I mean, really yesterday, the day before, all the time in the past was the best time to get your money working for you. And if you haven't jumped in yet, you're worried about the market, all you're going to do is invest as the stock market goes up. You're going to invest as the stock market goes down, and it's going to mitigate over time, and you're not going to lose out on as much of the gains that you could have received. So let me just go and show you again one more concept here. So if I jump into this screen, I'm going to go back to the web page and I'll talk about Geo Arbitrage. If you guys don't know anything about Geo Arbitrage, essentially it's just moving to an area that is going to cost less for you, and you're going to be able to retire or become financially free at a much earlier time. So as I said, that was a list of the top 10 most expensive countries to live in. But if you scroll down, you can see that there is a big discrepancy in where you are in terms of location and how much money you need to retire. So United States, you can see it's straight way over here, but this shows a very good graphical representation of how much money you need by location. And some of these countries aren't the best place. You're not going to want to live there, but there are a lot of solid options. Okay, so here is the list of all the countries, the median household income there on the left-hand side. And I'm just going to scroll through these so you guys get an idea. You can see exactly how much money you need in each one. So even looking at United Kingdom versus the United States, that's a huge difference. That's more than $10,000 annually as a difference. But if you keep going down, you can see Finland, $24,000. Italy is $20,000. Poland is $15,000. So it keeps going down. Mexico, $11,000. And obviously there's some bad areas to these countries, but there's also some really good areas that probably would require a little bit more money. So if I look at these, there is, it's just interesting to see the huge gap in understanding how much money you need to get by in each location. So again, let me just scroll back up. I wouldn't really go into a lot of these countries, but maybe I wanted something like I don't know, let's say I wanted to move to Portugal, $16,186. If I go into my calculator here, $16,186 divided by that same 0.0724, I would only need $223,000. So your options, they really open up. If you can consider doing Geo Arbitrage, if you can move locations, if you are willing to sacrifice just a little bit to be able to reap these massive benefits, that's exactly what you can do, and you can achieve these numbers much quicker than you may think. Now I use this website right here, trackyourdividends.com. It's a little bit skewed right now, but it is representing my dividend yield at 6.59%. Again, it's a little bit skewed. There was one discrepancy, one error in this portfolio, but if I go into the Robinhood portfolio, you can see my dividend yield is 3.07%. So this kind of figures out where you're at, how much your dividend yield is, so that way you can use that in the equation to help figure out how much you need to retire. So if I went back and took that same value, right, or maybe I wanted, let's say, $45,000 in retirement, and what I say my dividend yield was 3.07% divided by 0.03 7 here and hit enter. I would need $1.2 million in order to get that using my current yield. Now my yield is subject to change. It could be a lot higher or it could go lower depending on how I allocate my funds, but it's just something to keep in mind so you understand exactly where to go. Now you have to remember, dividend investing is just one form of passive income that you can generate. And as I mentioned earlier in this video, I'm trying to buy a duplex. I'm under contract and things are looking really well. And if that comes to fruition, about 2 years from now, once I raise rents, once I make the renovations that I need to on the property, if I decided to live in the 1-bedroom unit, the other unit, which is 3-bedroom, would completely cover my costs of living. It would cover my mortgage and my utilities, everything in this one property. And that way, you know, my huge living expense, that is the biggest expense for people, would then be pretty much gone, right? I wouldn't have to worry about much. And that is sort of the goal that I have with real estate, is just to add on to passive income. So I'm going to buy properties, I'm going to rent them out. I'm going to house hack. If I bought a single family house, I'd be renting out rooms to, you know, friends or people that are going to help chip in, pay money, and it'll allow me to buy the next property and the next one and the next one. So my goal is to be able to buy a new, you know, multifamily unit every 2 to 3 years. And if I can do it quicker, that's awesome. And it's just going to help foster my way towards financial freedom and potentially fat fire, where I'm going to retire early and have be able to inflate my lifestyle and live, you know, luxuriously. So if you guys took anything away from this video, it would really mean a lot to me if you click that like button. I put a lot of effort into these videos, as you guys know, and it will just help push it out on other homepages and get the message out there. Anyways, guys, thank you so much for checking out this video and have a great day.